Consistency in trading is not about winning every single trade. True consistency means showing up with the same rules, the same mindset, and the same discipline every single day, regardless of whether a trade wins or loses. This repetition builds reliability, while randomness destroys growth. Think of it like flipping a coin 100 times. The outcome of a single flip doesn't matter. What matters is repeating the same process. In trading, consistency creates predictability, while inconsistency turns even lucky wins into chaos. Without consistency, trading becomes gambling, not a professional skill. Most traders misunderstand consistency. They believe it means winning constantly or never having losses. But no system wins 100%. The real meaning is following the same process long enough for results to average out. Consistency is about behavior, not outcomes. It's about controlling actions, not controlling the market. Without consistency, every win feels like luck, and every loss feels like a disaster. With consistency, even losses make sense because they fit into your plan. Professional traders don't fear losing trades. They fear breaking rules. That mindset, valuing process over outcomes, is the mental edge that separates pros from amateurs. Consistency is like building muscle at the gym. You don't grow by lifting weights once. You grow by showing up every day. Trading works the same way. Every small, disciplined action adds up. Over time, these small wins compound into powerful results, while random big bets eventually collapse. The trap is that most traders chase quick profits. They switch strategies, follow random signals, or break their own rules after a few losses. This destroys consistency. What they fail to realize is that consistency, not speed, is what builds wealth. Slow, steady traders outlast reckless gamblers. Consistency protects you from emotional swings. Fear, greed, and FOMO lose their grip when you follow a routine. Your focus shifts from chasing results to executing your plan. This shift creates emotional balance, allowing you to trade with calm confidence instead of reacting impulsively to every market move. A consistent trader treats trading like a business. Each trade is a transaction, not a lottery ticket. Records are kept, risk is controlled, and routines are followed. In this environment, growth becomes predictable because every decision is made within the boundaries of discipline and documented by habit. Consistency may feel boring, but boredom is profitable. Excitement belongs to gamblers. Professionals know that long-term growth comes from repeating the same right actions over and over. The market rewards patience and discipline. Small, steady wins may not look glamorous, but they silently build unstoppable momentum. By the end of this video, you'll understand how consistency is built, why small wins matter more than jackpots, and how to train your psychology to stick with the process. Consistency isn't just a trading skill. It's a mental edge, a superpower that turns small wins into big success. Many traders confuse consistency with constant winning. They think a consistent trader must win every trade. But the truth is different. Consistency doesn't mean endless victories. It means showing the same discipline, risk control, and process no matter what. Consistency is behavior, not outcomes. Winning is only a byproduct. Imagine two traders. One wins today, loses tomorrow, then changes strategies. The other follows the same rules every single day, regardless of outcome. Over time, the second trader builds stability while the first stays stuck in chaos. Consistent behavior creates progress, while chasing consistent wins creates instability and failure. Consistency is about process. It's showing up with the same preparation, same risk rules, and same emotional discipline every day. Markets are unpredictable, but your behavior can be stable. Consistency means having something you control, your process, while outcomes remain outside your control. This creates reliability in an unreliable market. When traders chase results, randomness takes over. They win sometimes, lose other times, and their decisions shift constantly. This randomness destroys growth because there's no foundation. Without consistency, trading results cannot compound. Every win gets canceled by the next mistake. Random actions equal random results, not sustainable growth. Think of consistency like planting a seed. You cannot water it once and expect a tree tomorrow. Growth comes from small, repeated actions, watering daily, giving sunlight, protecting it. Trading works the same way. Consistency is the daily care, not the one-time effort. Without care, growth dies quickly. Inconsistent traders are like gardeners who dig up the soil every week to check progress. They kill their own seeds. By constantly switching strategies and chasing signals, they sabotage growth. Consistency means patience. You trust the process, nurture it daily, and let time transform effort into visible results. Consistency builds confidence. When you act the same way daily, you stop doubting yourself. You know losses are part of the plan. This confidence removes emotional stress because your focus shifts from predicting outcomes to executing your process. Small daily wins eventually create powerful momentum through repetition. Without consistency, you'll always feel lost. Every loss feels personal, and every win feels lucky. But with consistent behavior, you have a plan. Wins confirm the plan, and losses become lessons. Instead of chaos, you gain clarity. This clarity builds emotional stability, the most valuable currency in trading. Consistency also unlocks compounding. Just as savings grow slowly but surely, repeated disciplined actions in trading multiply over time. A trader who keeps risk small and follows the plan daily will see growth, while an inconsistent trader resets progress after every mistake. Compounding demands patience and repetition. So what does consistency really mean? It means valuing process over profits. It means trusting repetition over randomness. It means nurturing your trading habits like a seed, not chasing jackpots like a gambler. Consistency is not about being perfect. It's about being reliable. That reliability creates long-term success. Most traders don't fail because their strategy is bad. They fail because their psychology sabotages them. The biggest enemy is not the market, it's their own mind. Greed, fear, FOMO, and revenge trading push them into decisions that break consistency and destroy discipline. The result is chaos, not growth. Greed tells a trader to risk more than planned. Fear tells them to exit early before the setup completes. FOMO whispers, don't miss out. Revenge trading screams, win back losses now. These voices force impulsive actions that break the rules. Without rules, consistency collapses instantly. Lack of routine is another killer. Without a routine, decisions feel random. Some days, traders check charts all day. Other days, they skip preparation. This inconsistency makes the market unpredictable and stressful. With no structure, they drift, reacting emotionally instead of executing a clear plan. Chaos replaces order. False expectations also ruin traders. Many believe they must win big quickly. They think one massive trade will change everything. But this mindset creates desperation. Instead of focusing on small, consistent steps, they chase jackpots. The bigger the expectation, the bigger the emotional crash when results don't come instantly. The truth is, most traders don't actually fail because of poor systems. They fail because of impatience. They refuse to give their process enough time to play out. They change strategies every week, hoping to skip the boring middle part. Impatience is the silent killer of consistency. Inconsistency magnifies every mistake. A single bad habit, like moving stop losses, overtrading, or chasing setups, becomes deadly when repeated without awareness. Traders blame strategies, indicators, or even the market. But in reality, it's their inconsistency that destroys progress. Strategies don't fail, discipline does. Revenge trading shows the danger of emotions unchecked. After a loss, instead of stepping back, traders double down to win it back. This destroys accounts faster than anything. Revenge trades are impulsive, oversized, and reckless. One act of revenge can wipe out weeks of careful growth instantly. FOMO is equally destructive. A trader sees a move and thinks, if I don't enter now, I'll miss out. They rush in late, buying tops or selling bottoms. They break rules out of fear of missing. FOMO trades rarely succeed. They are born from emotion, not logic. Without consistency, even small wins vanish. You might catch a good trade today, but if tomorrow you break rules, profits evaporate. Trading becomes a cycle of ups and downs, with no net growth. Inconsistency ensures your account never compounds, leaving you stuck at zero progress. Consistency feels boring, and that's why traders avoid it. Excitement feels good in the moment, but it destroys accounts. Professionals embrace the boring routine because they know it builds results. Most traders fail simply because they prefer excitement over discipline. But without discipline, consistency never survives. Most traders dream of hitting that one perfect trade, the jackpot moment that changes everything. But that dream is fragile. It creates false expectations, emotional swings, and disappointment. Small wins, on the other hand, don't rely on luck. They are repeatable. They are reliable. A single jackpot might give you a story, but small wins give you a system. And a system is what truly makes you a trader. Think of small wins like laying bricks every single day. At first, it doesn't look like much. But day after day, the wall grows higher and stronger. Soon, that wall becomes unshakable. In trading, your wall is made of patience, confidence, and consistent execution. And every small win is a brick that strengthens your fortress against fear and failure. Compounding psychology works silently. Just as money compounds quietly in an account, self-belief compounds in your mind. Each time you follow your plan, you add a deposit into your mental bank. Over weeks and months, that bank becomes overflowing with confidence. Eventually, even tough market days can't shake you, because your reserves of self-trust are full. One small disciplined trade might feel meaningless today, but in the long run, it rewires your brain. You start to prove to yourself that you're not chasing, you're not gambling, you're following process. That shift from randomness to order is where real transformation begins. That's when you stop hoping and start believing. Science confirms it. Small wins change brain chemistry. Each time you succeed in a disciplined action, dopamine is released. Dopamine doesn't just feel good, it strengthens neural pathways. Over time, your brain literally starts craving discipline instead of chaos. You begin to feel satisfaction not from risk, but from rules. This is why gamblers chase adrenaline, but traders chase progress. A gambler's brain is wired to seek the thrill of uncertainty. But a disciplined trader trains their brain to enjoy consistency. And that rewiring starts with something as small as following one rule today. That's the true power of psychology in trading. Adopt the plus 1% mindset. It looks tiny, almost laughable. But the magic isn't in today. It's in tomorrow multiplied by 365. A trader who aims for 1% growth daily becomes unstoppable in a year. That's the math of consistency. Small inputs, massive outputs. Chasing 100% in one trade is gambling, but stacking 1% daily is strategy. The slow climb might feel boring, but boredom is where wealth is built. Patience multiplies results. And when you start thinking in percentages, not jackpots, you unlock compounding power no gambler will ever touch. Small wins build emotional armor. When you learn to respect gradual progress, losses stop feeling like disasters. You realize they are just part of the journey. Instead of panic, you respond with perspective. One loss doesn't erase my path forward. This mindset is priceless. But those who chase jackpots, one loss shatters them. They bet everything on one moment. And when it fails, they collapse emotionally. Small wins prevent this collapse by proving again and again that growth is not a single event. It's a continuous process. Think of fitness. One extreme workout might leave you sore, but won't change your body. Real transformation comes from daily exercise. Trading is no different. One monster trade doesn't make you skilled, but a series of small, consistent trades builds your trading body into something strong and resilient. A single discipline trade is like one push-up, worthless on its own, but priceless when repeated. Over months, those push-ups build strength. In trading, repetition builds mastery. What feels small today becomes powerful tomorrow. Momentum is invisible at first. It feels like nothing is happening. But each small win is like rolling a snowball, tiny at the top, massive at the bottom. Suddenly, progress that once felt impossible becomes unstoppable. That's how traders transform, quietly, then all at once. When momentum kicks in, trading feels lighter. You no longer drag yourself to the charts. You want to be there. Your brain associates discipline with progress, and that invisible force pulls you forward, even on hard days. That's how momentum fuels long-term consistency. Chasing jackpots creates suffocating pressure. You carry the weight of needing one perfect outcome, and pressure destroys clarity. But focusing on small wins removes that weight. Each goal feels achievable, and achievable goals reduce stress. Calm traders make clearer decisions. Stress and clarity are enemies. The more desperate you are for one big win, the more blinded you become. But when you pursue small wins, your vision sharpens. Decisions feel easier. The charts stop looking like chaos and start looking like opportunities. Over months and years, small wins compound into massive change. Your account grows, but more importantly, you grow. You evolve from a gambler into a disciplined trader. The habits you've built don't just last for one trade. They last a lifetime. This transformation is the real reward. Not the money, not the chart patterns, but the mindset, the ability to remain calm, follow rules, and play the long game. That's the edge every trader is chasing, but only those who stack small wins actually achieve it. Small wins feel slow at first, but over time, they add up to mastery. They rewire your brain, harden your discipline, and reduce emotional chaos. They build an inner strength that no market storm can shake. That's why mastery is never sudden. It's the product of thousands of small victories. In the end, small wins are your ultimate weapon. They give you confidence, resilience, momentum, and clarity. Big wins may look flashy, but they don't last. Small wins build a trader who can survive and thrive. And in trading, survival is victory, because if you survive long enough, success becomes inevitable. Consistency doesn't appear by accident. It is not a lucky streak or a random hot run. It comes from a system that doesn't break when emotions rise. I call this system the mental edge framework. It doesn't predict markets. It predicts your own behavior. And when your behavior is controlled, consistency becomes inevitable. This framework works because it builds strength where most traders crumble: rules, routines, and mindset. Losses will still come, but they won't destroy you. Wins will come too, but they won't inflate you. The framework doesn't just control trades, it controls the trader. That's the mental edge. Step 1 is crystal clear trading rules. Without rules, you are at the mercy of the market. You chase, you fear, you overreact. But with rules, you have an anchor. They define your boundaries, your maximum risk, your entry signals, your exit conditions. Rules create clarity, and clarity kills chaos. Don't see rules as restrictions. See them as shields. They don't trap you. They protect you. A trader without rules is a soldier without armor. Every market move cuts deep, but a trader with rules moves forward safely, blow after blow, still standing strong. Risk management is the foundation stone. Before you click buy, you must know exactly how much you're willing to lose. If that number is clear, fear vanishes. You are no longer gambling. You're executing. With fixed risk, even a losing trade is not destruction. It's just part of the process. When risk is defined, consistency is preserved. It doesn't matter if the next trade wins or loses. You're still safe. This turns every trade into one small step, not a do-or-die event. And when pressure is removed, your mind finally has space to focus on execution, not survival. Entries and exits must also be rules-based. Without them, you will always hesitate, second-guess, and chase the market. But when entries are defined, you know exactly what to wait for. When exits are defined, you know exactly when to leave. Rules transform chaos into a checklist. Impulse disappears when structure takes over. You no longer jump into random trades. You only act when the market fits your plan. That discipline turns trading into a game of patience, not panic. And patience is the soil where consistency grows. Step 2 is journaling. Most traders skip it because it feels boring. But journaling is where growth hides. A trading journal is a mirror. It shows you your strengths, your mistakes, your blind spots. Every trade written down is a lesson captured. Over time, the journal reveals patterns. You realize where you shine and where you fail. It transforms randomness into data, and data turns into discipline. With every page, your trading becomes less of a gamble and more of a measurable, repeatable process. But writing is only half the power. Reviewing is the other half. Once a week, you revisit your trades like a coach watching game footage. You ask, did I follow my rules? Where did emotions interfere? Reviewing builds self-awareness. Without it, mistakes multiply. With review, every week becomes an upgrade. You stop repeating errors and start refining execution. Slowly, you sharpen your edge. A trader without review stagnates. A trader with review evolves. And evolution is what creates long-term consistency. Step 3 is emotional detachment. The market doesn't care about your joy, fear, or frustration. If you let emotions rule, you lose. Detachment means you trade steady. No celebration too high, no despair too low. You become unshakable, no matter what the chart throws at you. Detachment doesn't mean you stop caring. It means you shift your care from results to process. You detach from single trades, but remain deeply committed to your system. This way, you lose nothing when a trade fails and gain nothing extra when a trade wins. Balance becomes your strength. This framework is your shield on losing days. Without it, losses feel personal and devastating. With it, losses are expected, controlled, and logged. You remain calm because the framework never promised perfection, it promised consistency. And consistency survives losses. The difference is night and day. A trader without a system feels crushed by losses, while a trader with a mental edge framework sees them as tuition fees. Every loss becomes a lesson. Every win becomes feedback. Nothing is wasted because everything is part of the system. The mental edge framework isn't flashy. It won't impress gamblers looking for shortcuts. But it works because it makes consistency unavoidable. Rules anchor you. Journaling trains you. Detachment protects you. Together, they form a system stronger than emotions or randomness. And that's how traders stop relying on luck. Luck fades, but structure lasts. With the mental edge framework, you no longer chase markets. You build yourself. And when you build yourself, the market can't break you. That is the true edge of consistency. In the end, consistency is not a dream. It's a framework. Rules guide your steps. Journals track your growth. Detachment keeps you calm. Piece by piece, they form a trader who cannot be shaken. That's the mental edge. That's professionalism. Flashy wins will come and go. Losses will too. But a trader with this framework survives them all. And survival is victory. Because if you survive long enough, success becomes inevitable. That is the promise of the mental edge framework. Markets test emotions more than strategies. Every chart is a mirror, reflecting fear, greed, and excitement back at the trader. Logic fades when emotions roar. Consistency isn't luck, it's discipline. Emotional control doesn't erase feelings. It stops them from hijacking decisions. A steady mind builds steady results. A trader who controls emotions controls consistency. Fear whispers, greed shouts, and excitement blinds. But the consistent trader doesn't react. He pauses. By noticing emotions instead of obeying them, he takes the first step toward mastery. The market rewards calm recognition and punishes impulsive surrender. Fear delays entries. It convinces traders to wait until the move is gone. Greed inflates risk, turning manageable losses into destruction. Excitement urges chasing every flicker. When emotions lead, chaos follows. Consistent traders don't silence emotions. They translate them into warnings that awareness has begun. Reframing is power. Fear says, I might lose, but wisdom replies, I'm protecting capital. Greed says, I need more, but wisdom replies, one trade won't change my life. Excitement says, this is the big one, but wisdom answers, it's just another trade. Reframing kills emotional traps. Consistency begins with calm. A breath is not wasted time, it's armor. Deep breathing lowers adrenaline, resets clarity, and turns panic into patience. In the market, 2 seconds of breathing often prevent 2 weeks of regret. Calm is free, but its payoff is priceless. Stepping away is not weakness, it's wisdom. When screens feel suffocating, the best trade is no trade. A 5-minute walk restores perspective. Markets never run out of opportunities, but minds run out of clarity. Walking away protects both consistency and capital. Excitement feels like energy, but hides as a trap. It tells you this is the one setup that matters most. Without rules, excitement drives over trading. With rules, it transforms into focus. Excitement isn't destroyed. It's tamed into discipline that sharpens every decision. Rules transform emotions into order. Fear can't stop you. Greed can't push you. Excitement can't mislead you when rules stand firm. Every checklist item is a wall against chaos. Rules don't limit freedom. They protect it, making trading a process, not a gamble. The equation is simple. Control emotions, control consistency. Chaos fades when order is built within. Every calm decision reinforces structure. Markets are unpredictable, but traders don't have to be. The strongest edge is not the strategy. It's the self-mastery behind it. Emotional control is daily training. Like lifting weights, the mind strengthens with each repetition, each pause before trading, each journal entry, each calm exit. Discipline grows in small steps until it becomes unshakable. What begins as effort transforms into habit. Mastery is never instant. Just as muscles require repeated tension to grow, emotional control requires repeated tests. Each loss becomes practice. Each temptation resisted builds resilience. Slowly, the trader's first reaction shifts, from emotion to awareness, from chaos to calm. That's real growth. Fear, greed, and excitement will never vanish. But mastery means transforming them into signals. Fear becomes a reminder to check risk. Greed becomes a warning to reduce size. Excitement becomes a cue to slow down. The same emotions now guide discipline instead of breaking it. Consistency survives losing days. A reckless trader feels crushed by red candlesticks. A consistent trader sees them as tuition paid to the market. Rules, journaling, and calm transform pain into data. Instead of quitting, he adjusts. His edge is not luck, it's resilience. Losses sting, but they don't have to scar. When emotions are managed, losses become stepping stones instead of stumbling blocks. Each reviewed mistake is recycled into progress. The consistent trader doesn't avoid losses. He converts them into lessons that sharpen the next trade. Emotional steadiness turns trading from chaos to craft. The reckless trader feels tossed by waves. The consistent trader feels guided by compass. The difference isn't strategy, it's stability. Calm transforms markets into opportunities instead of threats. When rules, journaling, and detachment combine, consistency becomes automatic. The market no longer shakes the trader because his system steadies him. Emotional spikes become whispers, and whispers become silence. Calm replaces chaos, and results follow naturally. The strongest traders don't try to kill emotions. They learn to live with them wisely. They build routines strong enough to hold steady even when fear, greed, or excitement flare. This balance is their true mental edge, using emotions without being used by them. Discipline grows in visible roots. Like a tree, consistency doesn't show immediately, but over time, it anchors deeply. Emotional storms can shake branches, but never the foundation. Traders who nurture discipline slowly discover that nothing external can uproot their steadiness. True mastery is internal. It doesn't depend on predicting the next move. It depends on responding the same way every time, with calm, structure, and discipline. Consistency isn't built in the market. It's built in the mind, then reflected on the chart. The journey ends where it began. Emotions test you every day. But now you hold tools, rules, breath, review, detachment. With them, chaos becomes order. Consistency becomes inevitable. And the trader who masters himself discovers the greatest edge of all, unshakable control. Losses are not enemies. They are teachers. Every trader, from beginner to professional, faces them. The difference lies in response. Inconsistent traders call them failure. Consistent traders call them feedback. With the right mindset, every red candle becomes tuition, not tragedy, an investment in mastery, not proof of weakness. The market never punishes, it educates. Each loss is a lesson wrapped in discomfort. Inconsistent traders panic and overtrade. Consistent traders pause, record, reflect. They know one trade never defines them. The difference between quitting and growing lies in perspective. Losses can shrink accounts or expand wisdom. You choose. An inconsistent trader panics after a loss. Confidence cracks. They chase new trades, hoping to erase pain. Instead, mistakes multiply. The account drains. The spiral isn't caused by losing. It's caused by reacting. They see a red candle as the end of their journey instead of one step. A consistent trader responds differently. A loss doesn't break them. It reminds them. They breathe, journal, and return to rules. One loss among hundreds means nothing. Their question is never why me, but what can I learn? In that question lies the seed of consistency. Journaling turns red into gold. Recording setups, entries, exits, and emotions creates a mirror. That mirror shows flaws hidden by memory. Without journaling, mistakes repeat endlessly. With journaling, losses recycle into growth. Each note on paper reduces the chance of repeating pain tomorrow. Traders suffer most when they confuse loss with identity. A loss becomes, I am a loser. That belief is poison. Loss is feedback about one decision, not judgment of character. Consistency grows when identity shifts, from I win trades to I follow process. Think of losses as tuition. Schools charge fees for learning. Markets charge through red candles. The fee stings, but the lesson pays back forever. Traders who treat losses as tuition improve. Traders who treat them as punishment quit early, never unlocking their true edge. Consistency doesn't mean avoiding losses. It means absorbing them wisely. Each loss sharpens patience, risk control, and discipline. Without losses, growth halts. Without reflection, mistakes multiply. The consistent trader doesn't fear red days. They expect them, prepare for them, and harvest lessons from them. Emotional traders bury losses under denial. They avoid review and repeat the same pain. Consistent traders face losses directly, studying them like clues. Over time, reviews build personal rules stronger than textbooks. The market speaks in losses, but only disciplined ears can hear. Two traders, same market, same loss. One panics, spirals, and blows up. The other journals, reflects, and compounds wisdom. The difference isn't talent, it's treatment. Losses can be walls that block growth or doors that open mastery. The path depends on mindset. Losses don't destroy consistency. Refusing to learn does. Every red candle is a teacher in disguise. Ignored, it repeats. Embraced, it transforms. Over time, reflection makes losses smaller, wins larger, and progress inevitable. In trading, the most expensive thing is not loss, it's ignorance. Consistency thrives on recovery speed. Inconsistent traders take weeks to emotionally recover from one red candle. Consistent traders bounce back the same day. Why? They know loss is data, not identity. Faster recovery means faster progress. and progress means the journey continues unbroken. Every loss contains two prices, the money lost and a lesson gained. Pay one without collecting the other, and the market robs you twice. Collect the lesson, and the cost becomes investment. The only wasted loss is the one never studied. Losses reveal blind spots. Maybe you enter too early, risk too much, or chase noise. Each review is like turning on a flashlight in a dark room. Suddenly, the hidden traps are visible. Once seen, they're avoidable. Once avoided, consistency compounds. The most painful losses are often the most valuable. They break arrogance, expose flaws, and force evolution. Many consistent traders trace breakthroughs back to their toughest losses. Pain opens doors pride keeps shut. Lessons learned through fire are the ones remembered forever. A trader's journal is their personal textbook. Every red day adds a chapter. Over months, patterns emerge. Mistakes shrink. Discipline strengthens. Unlike market news or indicators, this book is written in your own handwriting. That makes it priceless. It's the blueprint of your evolution. Losses test patience. They whisper, "Quit now, it's hopeless." But every trader who stayed long enough discovered that red days were detours, not dead ends. Patience turns losses from stop signs into milestones. Consistency is built not in wins, but in how you survive losses. The market respects resilience. Losses will always come, but consistency depends on how you stand afterward. If you can lose without breaking, you're already ahead of most. In trading, the strongest signal isn't a candlestick. It's the traders still standing after the red ones fall. The ultimate shift. Losses no longer feel like punishment. They feel like progress markers. Each one sharpens skill, builds discipline, and shapes identity. Consistent traders don't run from losses. They collect them like teachers. Because in the end, the best traders are not winners. They are learners. Consistency often feels boring. It's not flashy, not exciting, and definitely not something that will impress your friends in the short term. But here's the truth. Boredom in trading is profitable. The quiet, steady repetition of rules is what separates survivors from gamblers. Most traders chase the thrill, the big win, the sudden spike, the dream of doubling their account overnight. But that thrill-seeking mindset is the fastest path to inconsistency and eventual burnout. Wealth doesn't come from one big play. It comes from hundreds of small, boring decisions. Thrill-seeking makes every trade feel like a lottery ticket. The rush is addicting, but so is the crash. After one big loss, confidence evaporates. Excitement tricks traders into thinking they're progressing when in reality, they're digging deeper holes. Think about compounding. If you grow your account just 1% per day, it doesn't sound exciting. But over time, that 1% compounds into something massive. Small, steady gains, repeated again and again, become a snowball rolling downhill, unstoppable in its momentum. Compounding is the hidden engine of wealth. What looks like tiny progress at first becomes exponential growth later. The key isn't speed, it's survival. Every day you survive with discipline, you give compounding more time to work its magic. Short-term thrills give you emotional highs and crashes. Long-term consistency gives you stability, growth, and eventually freedom. This is why disciplined traders see trading as a marathon, not a sprint. It's slow, steady, and sometimes boring, but always rewarding in the end. A sprint burns energy quickly, leaving you exhausted. A marathon saves energy for the long run. Trading works the same way. Those who sprint with oversized risk collapse early. Those who pace themselves with consistency reach the finish line of financial freedom. Gamblers blow up accounts because they mistake excitement for progress. Real traders stay patient because they know boredom means the system is working. In fact, boredom is a signal that you're finally trading with discipline instead of emotions. If trading feels thrilling every day, you're probably gambling. If it feels calm, structured, and even a little dull, you're likely on the path of consistency. Boredom in trading isn't weakness. It's strength disguised as routine. Long-term wealth doesn't come from one magical strategy. It comes from years of compounding habits, following rules, controlling emotions, and taking small wins seriously. This is the real power of consistency. It transforms ordinary effort into extraordinary outcomes over time. Habits are invisible at first. Nobody notices when you follow rules for a week. But months later, those invisible habits show visible results, steady growth, stronger confidence, and unshakable discipline. Habits compound just like money does. The market is a playground for gamblers, but a wealth machine for the consistent. Those who respect compounding understand that the longer you survive in the game, the more the odds tilt in your favor. Survival itself becomes a strategy. Inconsistent traders obsess over speed. How quickly can I double my account? Consistent traders obsess over survival. How long can I protect my capital? One mindset burns out. The other compounds in a lasting wealth. Patience isn't sexy, but it's profitable. A trader who holds on, follows the process, and thinks long-term outlasts 10 reckless traders who chase quick thrills. Over years, the difference isn't small, it's life-changing. Patience is what turns short-term noise into long-term signals. Waiting through boring days filters out the chaos and reveals true opportunities. Without patience, traders chase every flicker. With patience, they master timing. Compounding doesn't just grow your account. It rewires your psychology. Each day of following rules strengthens your discipline, rewires your brain for consistency, and creates unstoppable confidence. This is why consistency is the ultimate trading edge. The brain is like muscle. It grows stronger with repetition. Every boring, consistent day is a rep that trains emotional control. Over time, discipline becomes automatic. That's how consistency rewires you for success. So the question is this: do you want excitement or do you want freedom? Excitement lasts a moment. Freedom lasts a lifetime. And the only path to freedom in trading is long-term consistency. Excitement will always tempt you. It's human nature. But the trader who chooses freedom over thrill builds a life beyond the charts. Peace of mind, financial independence, and time. These rewards are worth more than any rush a single trade can give. Meet Alex, an ordinary trader who once lived in chaos. He jumped into trades without a plan, chased every market move, and let emotions guide his actions. His account constantly swung between highs and devastating lows, leaving him frustrated, stressed, and questioning his ability to trade. At first, Alex thought trading was about luck and quick profits. He chased green candles like a gambler at a casino. Every loss hit him like a punch, and every win gave him false hope. Deep down, he knew this wasn't sustainable, but he couldn't stop. 1 month, after blowing half his account in a week, Alex hit rock bottom. The pain was too much. He finally realized, the problem isn't my strategy. The problem is me. That's when he decided to shift from chasing outcomes to focusing on consistent behavior. He started small. Each morning, he created a pre-trade routine. Review journal, check rules, breathe, and plan. It wasn't exciting, but it gave him structure. Suddenly, instead of feeling like chaos, trading felt like a process. Slowly, his mind began to calm down. At first, Alex didn't aim for big wins. He focused on protecting his account and achieving small daily gains. Sometimes it was only 0.5%, sometimes even less. But the act of following the process gave him confidence, even on days he lost. Losses didn't feel like failures anymore. He wrote them down, studied them, and learned from them. Instead of revenge trading, he paused. Instead of panic, he reflected. Losses became tuition fees, and his journal turned into a book of lessons. Weeks passed, then months. His account grew slowly, almost unnoticeably at first. But Alex wasn't chasing speed anymore. He had discovered the secret. Consistency isn't about winning every trade. It's about showing up, following rules, and letting the process build momentum. Alex's mindset transformed. The chaos was gone. Instead of emotional swings, he felt steady. Instead of fear, he had patience. Instead of greed, he had discipline. His trading wasn't flashy, but it was finally profitable, sustainable, and, most importantly, consistent. His friends didn't understand how he could sit quietly each day, taking small trades without excitement. But Alex knew the truth. He wasn't chasing a thrill. He was building freedom, brick by brick, candle by candle, day by day. And here's the lesson. If Alex could transform from chaotic gambler to consistent trader, so can you. The path isn't about genius or luck. It's about patience, discipline, and the power of small wins. If he did it, you can too. Consistency isn't about magic. It isn't about one huge win that changes your life overnight. Consistency is about building your edge brick by brick, day after day. Just like a seed grows into a tree, steady effort creates unshakable strength in the trading world. Remember, consistency is not the same as winning every trade. It means repeating the right process every single day, regardless of outcome. Losses will happen, wins will happen, but your edge is in the discipline of showing up and following rules. The market rewards clarity, not chaos. Every rushed decision, every FOMO trade, every act of revenge pulls you further from consistency. But each calm, disciplined choice brings you closer to the trader you dream of becoming. Small wins build the foundation of big results. Here's the truth. You don't need one lucky trade. You need 100 consistent days. Imagine showing up daily, sticking to the process, and letting compounding work silently for you. That's how wealth is built. Not in explosions, but in quiet persistence. Small wins may look boring, but boring is what makes you rich. Big gamblers come and go, but steady traders stay. Consistency is slow, steady, and unshakable. The irony is this. Boredom is the price of freedom, and most traders aren't willing to pay it. So here's your challenge. Don't aim for flashy profits. Aim for 30 straight days of consistent trading. Journal every decision. Follow your rules. Stay patient. If you can survive 30 days with discipline, you'll prove to yourself that you can survive years. Ask yourself this. What would change in your life if you finally stopped chasing and started building? What would freedom feel like if every day you showed up with calm, focus, instead of fear and chaos? Consistency is the doorway to that future. This isn't theory. You've seen how real traders transform when they commit to routine, small wins, and steady growth. The difference between failure and freedom is not talent, it's commitment. Ordinary traders become extraordinary when they decide to stick to consistency. So here's my final message. Stop chasing the jackpot. Start building your edge. Consistency isn't glamorous, but it's powerful. If you master it, the market cannot break you. Small wins, big success. That's the game. Your future depends on the discipline you choose today. If this message hit you, here's what I want. Drop a comment sharing your biggest struggle with consistency. Like this video if it inspired you, and subscribe for more lessons on the psychology of trading. Your journey starts now. 30 days, one process, one future.